you have to decide for yourself how much you're willing to risk there, because even if, let's say, a sector does really well and they come out and do a bail-in, not just of your bank deposits, but all your investments, it doesn't matter if it's up 100% in the last 3 months, you will have lost that.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Mario Ineco from the Mineco64 YouTube channel. Mario, thank you so much for joining us today.
Oh, you're welcome, Elijah. Nice being with you again.
Well, it's great to be with you again. I did want to discuss what we're seeing in the banking system. I know back in the March-April timeframe, we saw quite a few bank failures, and that had to do with rising bond yields and their assets falling in value, and they had to liquidate them at a loss. But now bond yields are even higher. They're hitting new highs we haven't seen since 2007. So your perspective on where we are right now, and how are any of the banks still standing is my question.
Yeah, and I think this morning as we speak, the 10-year yield is right near 5%. I think, we're at 496. The high was 499. And your question is how, if yields are a lot higher and the bank's balance sheets are looking more precarious, how can they be still standing? I think it's because of what the Fed did and the Treasury to help calm things down. They came up with that BTFP program, which basically means that banks that have assets that have taken a large haircut, they can go and borrow from the Fed at par. And I think that's calmed things down. That's calmed people, depositors down. And the other thing as well, the reaction to SVB failure, the fact that the FDIC covered people with over 250,000, it's probably calm people down, and they probably moved a lot of their accounts to the too big to fail banks, and I think that's why things have calmed down. But I think the reason why gold and silver, I think, have been doing fairly well of recent is because the markets expect the Fed to be there if there's another banking crisis and the Treasury. So that means more and more dilution of the currency. So, or I could be wrong. There might be a few banks there that are in trouble, and the problems will flare up. I've heard Bank of America's had huge losses. They're sitting over 100 billion in losses, and they had about 20 billion for the latest quarter. And not to talk about all the smaller banks, which are heavily invested in, I think, commercial-backed mortgages and commercial real estate. And with Treasury yields rising, and now we're also seeing the shorter end rise, like the 2-year rose the other day to the highest in 16 years. It means that corporate bonds and mortgage bonds are going to, their yields are going to rise. And eventually that's going to bring the economy to a halt, to a big recession. And we're seeing the yield spread between the 2 and 10 steepen. It's I think around 28 now. At one point it was over 100 basis points, if I'm not mistaken. So it was inverted, but once it gets back to zero, it means we're definitely going to have a huge accident in the markets and a recession. So I think we're close to it.
I know a lot of people are looking for something to happen by the end of the year. Some people are calling for bank bail-ins. What is your perspective on what could happen? What sort of accident are you looking for?
Bail-ins are a possibility. I think the European banks and the regulators were not very happy, even though they can't really do anything about what happened in March, April in the U.S. There were actually bailouts. They didn't call them bailouts. They could have bailed the depositors in. I think that's possible. And I think now as well, they can bail in bondholders as well. Recently, there's a company, I forgot which one it was, that I think it was Metro Bank here in the UK, a small bank, and the the bondholders, they've kind of their bondholders have been swapped into equity, worthless, almost worthless equity, billions. That's what I think Frank Dodd, after 08, 09, that's what the law says, that it is going to be a bail-in. And a bail-in is basically when they take depositors' money to bail out the banks. They could also use that to bail out derivatives. A lot of the too big to fail Wall Street banks, they use customers' deposits to back their derivatives. And we also recently saw this book called The Great Taking, which I read and I made a video on, that David Webb thinks they could use not just your deposits, but they could use your 401ks, like your securities, your bond holdings, stock holdings. They could take that from you and use to liquefy this whole house of cards that is the OTC derivatives. So yeah, it's very dangerous. That's why I keep telling people that they need to have some insurance, gold and silver outside the system. Not to say that you can't have some minors, which I do have, but you have to decide for yourself how much you're willing to risk there. Because even if, let's say, a sector does really well, and they come out and do a bail-in, not just of your bank deposits, but all your investments, it doesn't matter if it's up 100% in the last 3 months, you will have lost that. So it's a very, these are very interesting times. And not to talk about what's happening geopolitically now, that basically creates a lot of distractions, and people take their eyes off the ball in terms of what's happening in the markets because they're so focused on other news.
No, when it comes to bank bail-ins, I mean, when we saw bank failures back in March and April, what people were concerned about is, if they have more than $250,000 in the bank in the US, then is that going to be insured? And what we saw is the government stepped in and bailed people out regardless of how much they had in the bank. But is that kind of the wrong question now? Does the FDIC limit even mean anything in the case of bank bail-ins?
Yeah, what happened in March and April, a lot of millionaires from Silicon Valley and a lot of big companies. People forget companies when they leave 250,000 or more, or let's say they leave an amount over 250,000 to banks, they're liable. They're under risk as well. Of losing everything. It's not just individuals. Yes, and it was a political decision to bail out these multimillionaires. And there's that senator, I think, from Oklahoma, who said, "Are you going to bail out, a small business or someone who has more than 250,000 in a small Oklahoma bank?" And Janet Yellen wasn't able to say whether it will be like a political decision, I think. And as for the FDIC, like any other kind of insurance like that, not just in the US, but in the UK, in the European Union, they never have enough to cover all deposits. They have enough to cover maybe a small bank failure and depositors. So if we have a real systemic crisis, this FDIC insurance doesn't mean a thing, the 250,000, nor does the FSCS here in the UK, where they insure £85,000. But who knows? they could decide, the Fed and the Treasury, that if they don't cover everything, there will be riots in the streets. So I think it's either going to be, the FDIC insurance works only, if there's a small crisis and they can cover things. But we saw that even in March, they had to Yeah, they had to. I think the FDIC's borrowed money from the Fed to pay these people. So if it gets really systemic, then yeah, all bets are off. And I wouldn't feel safe having any kind of balance in the checking account with the bank in the US or in the UK. The only reason I keep some is to for bills and to pay taxes, but the rest I try to have as much outside the system. And the bail-in as well. That's another thing. Or could this be their intention that they bring down the whole system, and if you had 250,000, now you're going to have 25,000 in the new CBDC or something like that. Who knows? That might be the way they will do it. But definitely the FDIC insurance is not really solid. It's just like the banking system. It's just another fractional reserve operation.
You mentioned having assets outside of the banking system in precious metals, physical precious metals. Your perspective on what we've seen recently, obviously the conflict in Israel, between Israel and Hamas, has definitely caused an increase in the price of gold and silver in the last week or two. What is your perspective on the current gold and silver markets?
Yeah, gold is especially looking pretty good technically. Like long-term charts, we bounced up before the war kicked off in Israel and Gaza. Gold dropped to around 1805, and it hit the 200-week moving average, and we bounced really well off that. And now we've gone above the 100 and the 50-week, and they all seem to be, the 50 is above the 100 and the 100 above the 200, and the price has gone above them. And the last time that happened was in the beginning of 2019, when gold started taking off from around 1,300, 1,400. So I think gold looks good. Is it related to a geopolitical situation? Yeah, there is some of that, but I think a lot of it is related to the fiscal situation in the U.S., the deficit spending, the public debt that's going rising like crazy, the rising bond yields. I think, yeah, it's not just the longer term yields, but the 2-year, as I said earlier, is going up. And we're in a bond bear market, and I think a lot of people still believe that bond yields are going to go back towards zero, and I think they're going to be mistaken. And what it means is that the backing for the U.S. dollar, which is government bonds, is losing its value, and that means that that's a positive for gold. I spoke today about Jim Sinclair in my morning video, and he had these 5 pillars for a long-term bond bull market. And the only pillar that wasn't really erect, so to speak, and that was there up until a year and a half ago, was a bear market in U.S. Treasuries. And I think we now have it. And most people think that rising yields are bad for gold, but they were anything but in the 70s, and we had a bear market in bonds. So that's why I believe, they're going to continue to do well. And silver is, of course, lagging, but it will eventually catch up, and I think even outperform.
No, I think one of the key things that you mentioned before is that when conflicts arise or other big news happens geopolitically, that can often distract from other things happening in the news, right? Where obviously it's very serious situations over in the Middle East, but it's important to also keep our eyes on what is happening in the US, what is happening in the banking system, because sometimes, I mean, even the Federal Reserve Act, right, was passed during around Christmas time when no one was paying attention. So it's important to make sure nothing is kind of happens without us looking at it. What are some of can you kind of expand on that and how the government and news agencies can use other major events to kind of distract from other things happening?
Yeah, it's not even that they don't report. Like I'm sure they reported on the Federal Reserve Act, which was passed on December 23rd, 1913. And I think a lot of the senators that were supposed to be voting, they had left for Christmas already because you had to go by train in those days, so it took a while. You couldn't fly. But yeah, they don't even hide the news. It's just that the bigger news, like what's happening in Israel and Palestine or Gaza, overwhelms everything. It's everything. It's the only thing people talk about. So the important financial news. So let's say it's on page 17 of the newspapers, and people don't look at it. I mean, I learned I think last year that back in 2008, during the Lehman crisis, just in the aftermath of the Lehman crisis in October, the UK Parliament passed something called the Climate Change Act, which I've never heard of, which was what set up all the green agenda that is now like picking up so strongly. And so many people, you ask them about the Climate Change Act, no one knows about it. And so that's what I mean. You need to keep an eye on things. I think FASB 56, which is the accounting standard that says that the Treasury and the government can basically hide government spending due to, let's say, national security. That was, I think, put on the books in October of 2018 when they had the whole news about is it Brett Kavanaugh, who became Supreme Court justice. There's a big scandal about him, and that was all that people were covering. And this FASB 56 went on the books around that time, and no one saw it. So yeah, there are a lot of things. I don't know what this will be. It could be maybe on a day where some huge development takes place in the Middle East vis-a-vis, let's say, Iran or Syria. The Fed and the Treasury could set something up like a new program, and no one really looks at it except maybe us. We'll keep a close eye on that.
Now, besides investing in precious metals, something outside of the system, how do people stay in tune with what is happening in the financial system and also prepare, in your view?
In the financial system, I think right now you need to keep an eye on bond yields, because if they keep rising a lot, there's going to be trouble for all asset classes. I mean, prepare. I think I've been telling people that I think you can't do it all at once. You have to have a mindset, and that mindset, in my opinion, is one of paying down as much debt as you can, living within your means, keeping a tight budget, not like the governments do, run a surplus. And yeah, I mean, as for prepping and preparing, I'm not an expert, but it's all common sense. You just keep things that you might not be able to get for a week or two, things that you really need every day. But one thing I would say, I'm not really gloom and doom in terms of the prepping, because I lived in Brazil in the 80s and we had a few currency collapses. Yeah, and it's disruptive. The shelves go a bit bare for a week or two, but things come back again. I wouldn't get too despondent and too negative.
I think that's very important to obviously look at the current situation, but not despair, right? Because that doesn't help anything. I think preparation and also looking at things realistically, as you mentioned, is very important. Did you have any last thoughts before we let you go? And where can people find you online?
Last thoughts. I mean, just be patient. Don't let emotions run high. I know everyone's emotional, but and keep calm and keep your head on while all those around you lose theirs, so to speak. Where you can find my work is on YouTube, mostly Maneko 64. I post a video there virtually every day. And I'm also on Twitter at Monaco1964. There are a few impersonators out there, so make sure you do at Monaco1964. And yeah.
Fantastic. Mario, thank you so much for your time today, and God bless.
You're welcome. God bless, Elijah.